Every crash, every pump, every delay you see on the crypto calendar, none of it happens by accident. Behind every postponed ETF, there's a pattern. And this time, all signs point to one date, November 6th, 2025. Because what looks like hesitation might actually be a coordinated setup for XRP's biggest institutional moment yet. The story begins with a small headline lost in the noise. Themes Crypto ETF delayed until November 6, 2025. Most people scrolled past it. But analysts who have followed Ripple and XRP for years didn't. They noticed something. Every major ETF delay, Bitcoin, Ethereum, Solana, is syncing around one window. And that window overlaps perfectly with the SEC's final review period for new altcoin-based exchange-traded products. This isn't a delay, it's a countdown. ETF launches follow strict calendars. When the Securities and Exchange Commission extends a review period, it's not improvising. It's following a roadmap written into law. 240 days maximum for a decision, multiple checkpoints in between. The Themes ETF was one of several filings positioned to include a basket of digital assets, not just Bitcoin. That's where the real tension begins. Bitcoin ETFs were the warm-up. Altcoin ETFs, including assets like XRP, Solana, and Ethereum, are the main event. When the delay notice came, retail saw weakness. Institutions saw strategy. By shifting to November, issuers are aligning with the expected end of the SEC's crypto policy overhaul, a phase insiders call the final clarity window. That's when multiple review extensions expire and new classification frameworks are due. Notably, this includes how non-security tokens like XRP will be treated inside ETFs. So while some cry regulatory indecision, those who understand the SEC's cycle see regulatory synchronization. Enter Ripple Bull Winkle, one of the more respected XRP researchers on X. In his viral post, he asked the question most missed. Was this planned from the start? The Themes ETF just delayed until November 6th. If you ask me, that's not random, that's strategic. He's right to ask. The timing perfectly overlaps with two events. The SEC's final consultation on altcoin ETF approval frameworks, the post-litigation phase of Ripple settlement and institutional rollout strategy. Bull Winkle added, Bitcoin, Ethereum, XRP, and Solana. They already told you which ones that day are setting up for. So why delay unless you already know what's coming? That line turned heads because it reframes the delay not as fear, but as coordination. He suggests ETF issuers, market makers, and possibly regulators are preparing for a synchronized green light. And when you look at the data, the pieces fit. Institutional adoption doesn't move with emotion. It moves with compliance windows. Consider this. In 2023, when Bitcoin ETFs were first approved, capital inflows didn't start the day of approval. They started weeks before, as funds quietly built positions, prepared liquidity, and lined up custodians. Now, in 2025, the same setup is visible, but the target asset is XRP. The November 6th date coincides with the end of SEC review periods for at least 4 pending altcoin ETF applications, the expected release of the digital asset classification framework, clarifying which coins qualify for spot ETFs, ongoing discussions on custody rules for banks holding digital assets. If those events align, the ETF market could open to multiple non-BTC assets simultaneously, and XRP, already cleared as not a security by US courts, would be first in line. This isn't timing by chance, it's choreography. Why does this matter for XRP more than anyone else? Because Ripple spent nearly a decade building the infrastructure that ETFs need: custody, liquidity, settlement, and compliance-grade transparency. While Ethereum and Solana still face ongoing questions about decentralization and staking models, XRP already passed the hardest test: The SEC versus Ripple ruling. When Judge Annalisa Torres declared XRP not a security, it didn't just vindicate Ripple, it laid the groundwork for institutional adoption. ETF inclusion requires assets that are liquid and globally traded, transparent in on-chain auditability, free from unresolved legal classification. XRP checks all three boxes. That's why analysts now believe the November window isn't random. It's targeted to align with XRP's readiness. Ripple Bull Winkle summarized it best. They know what's coming, and they're positioning around XRP. This isn't a delay, it's a setup. When you trace ETF filings, you'll notice clustering, multiple issuers amending prospectuses at once, updating custody providers, and synchronizing their product baskets. Why? Because they're waiting for the same regulatory domino to fall. Once the SEC finalizes its definitions, funds can launch without legal ambiguity. That's the setup phase. They're not waiting for clarity, they're waiting for permission to deploy. The ETF delay to November likely signals that the timeline for full-scale crypto ETF approval is converging. And if you follow how capital behaves around convergence points, liquidity floods in before headlines. Before we continue, a quick note about Unich, a platform actually reflecting this same evolution on a smaller scale. Unich operates one of the largest decentralized OTC markets, handling over $1.3 billion in trading volume. With 5.5 million active users and a growing partnership list including Kima Network, GT Protocol, and Script Network, Unich bridges users to early-stage assets before they reach ETFs, CEXs, or traditional rails. Not financial advice, but it's worth exploring how decentralized liquidity providers like Unich mirror what institutions are now building for themselves. Back to XRP. Let's break down why this exact date, November 6th, 2025, is becoming the most watched day in XRP's institutional history. 1. Regulatory alignment. That's when the SEC's final altcoin review extensions expire. The agency must issue decisions, approve, reject, or extend no further. This hard deadline forces regulatory clarity across multiple filings. 2. Infrastructure readiness. Custody giants like BNY Mellon, State Street, and Ripple-linked partners like Medico have all expanded digital asset custody solutions ahead of Q4 2025. Their infrastructure needs to sync with ETF go-live dates. 3. Liquidity synchronization. Liquidity desks don't like uncertainty. They prefer predictable triggers. November 6th becomes that anchor, the day liquidity providers can prepare capital to flow into new ETF products. 4. Institutional front-running. Every ETF approval cycle has one defining behavior: insiders position before the crowd. As November nears, expect accumulation patterns, particularly around assets already cleared legally, like XRP. The delay, therefore, isn't hesitation. It's precision timing for maximum impact. Zoom out. The market is changing in three structural ways. Policy convergence. The US, EU, and APAC are aligning digital asset regulations, enabling cross-jurisdiction ETFs. Custody maturity. Banks now have frameworks to hold digital assets without breaching capital reserve rules. Data transparency. On-chain analytics and auditing tools are integrating directly into institutional compliance dashboards. For XRP, this environment is a perfect storm. The first real opportunity for mass financial integration since its launch. When banks and funds start treating XRP not as a speculative token, but as a settlement asset, its utility narrative finally meets real-world adoption. That's what November 6th symbolizes, the institutional unlocking of XRP. If this unfolds as expected, the consequences ripple far beyond price. ETFs create structured demand. Structured demand creates predictable liquidity. And liquidity, once institutionalized, changes everything about volatility and valuation. Here's what analysts project. Institutional-grade ETFs holding XRP could expand market depth by 30 to 50% within 6 months of approval. Custody and derivatives volume could double. Given the infrastructure readiness of Ripple's partners, cross-border payment firms may follow, using XRP exposure as a compliance-ready bridge asset. Each layer feeds the next. Liquidity, trust, adoption. That's not hopium, that's mechanical economics. Now, if you're wondering how real utility-backed projects launch in this cycle, look no further than Unich's IDO. The $UN token starts at 15 cents, with 11% affiliate rewards, 8% USDT plus 3% $UN. NFT holders get a 25% token discount, and the project runs under legal registration in Lithuania for full transparency. Low FDV, strong utility, a community that's already 5.5 million strong. Not financial advice. Check the official Unich IDO link below. Here's how to know whether November 6 is truly the setup moment analysts predict. ETF prospectus amendments. If issuers like BlackRock or Themes start updating language to include altcoin exposure baskets, the countdown is real. Custody announcements. Watch for BNY Mellon or Ripple-connected banks announcing new digital custody launches by Q4. Liquidity movements. On-chain trackers showing accumulation in OTC or exchange wallets linked to institutional funds. Public silence. When major players go quiet, it's often because NDAs are active during final approval phases. Each of these will appear before November 6, and together they mark the alignment of money, policy, and infrastructure. So was the ETF delay bad news? No, it was a signal. One most retail investors completely missed. The Themes ETF didn't stall. It aligned. It aligned with the SEC's final review cycle, Ripple's post-litigation phase, and the institutions quietly preparing liquidity for XRP's entry into the regulated market. When November 6 arrives, the headlines will say, ETF approved. But those who paid attention will know. The setup happened months before. This is Wealthy Wise Finance. If you learned something today, subscribe, comment setup below, and remember, in crypto, timing isn't luck, it's design.